What's up traders, welcome back to the channel. In today's video, I'm going to break down 3 options plays that I'm watching closely for this week. So whether you're looking for smart setups, potential high reward opportunities, or just ideas to add to your watch list, I've got you covered. Hi, my name is Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. Now, a quick disclaimer before we get started that the information provided in this video is for educational and informational purposes only and should not be considered financial advice. I'm simply showing you my trades and how I trade, and I'm not a licensed financial advisor. With that said, before we jump into the options plays, let's jump in and see what's been happening on the macro front. So Fed Chief Jerome Powell said in a speech yesterday that the stocks seem fairly overvalued, and obviously right after those comments, the market sold off. If we also look at the CNN Fear and Greed Index, it's currently showing that the markets are in a state of greed, and that chimes in with what Jerome Powell said, which is basically that the markets are overvalued, suggesting that the asset prices are too high beyond the fundamental value. And greed can also be a warning sign that we may see a potential pullback soon. For me, when I see greed in the Fear and Greed Index, that basically means that it is a time of putting some cash aside and be ready to deploy that capital when the opportunity presents. So with that said, my first play is none other than NVIDIA. And if you heard what happened earlier this week, it only cements NVIDIA's position as a top AI play in the stock market. So NVIDIA soared 3% on Monday afternoon after the chip maker said that it would invest up to $100 billion in OpenAI under a new infrastructure agreement. The partnership lays out plans to deploy at least 10 gigawatts of NVIDIA systems for OpenAI's artificial intelligence backbone, with installations scheduled to begin in the second half of 2020. The company signed a letter of intent outlining phased investments as each gigawatt of capacity comes online. That setup provides OpenAI with a roadmap for scaling its compute power while securing NVIDIA a long-term buyer for its advanced data center hardware. Now, in addition to this announcement, last week we had NVIDIA commit $5 billion to Intel in a separate deal designed to strengthen wafer supply and joint engineering work. Together, the moves highlight how chip makers and AI firms are looking to lock in resources to meet surging demand for artificial intelligence infrastructure. Looking at NVIDIA's 6-month chart, it's currently trading right in between the top and the middle of the Bollinger Band. For those not familiar with the Bollinger Bands are a technical analysis tool that I utilize to help me decide when to enter or exit a position. And I utilize the Bollinger Bands in conjunction with other indicators like the RSI. So looking at NVIDIA's RSI, it's around 51, meaning that it's in a somewhat neutral territory and that it could possibly go either way, up or down from here. But looking at where NVIDIA is trading right now, I like the bottom of this Bollinger Band at this 166 level to build a position into NVIDIA. And to do that, let's open the options chain and see what kind of premium we would get if we want to sell some puts of NVIDIA at the 166 level. So I generally like to sell put options on a weekly basis. In some cases, I also like the monthly options. It just depends on the play and the price that I'm looking to achieve. So in this case, I'm going to go out 1 week to the October 3rd options chain. Obviously, we don't have a 166 strike price in this options chain. We have a 165 strike price, which is a 12 delta, or we have the 167.50 strike price, which is a 17 delta. So I like this 167.5 strike price. This is a delta of 17, which basically means there's a 17% chance of the stock to get to this price level by next Friday. Looking at where NVIDIA is trading right now, that would be about a $10 discount to the current price. If we sell cash secured puts at the 167.50 strike price, you would collect a premium of about $102, which is just taking the $1.02 times 100, because one options contract lets you control 100 shares. So you would collect a premium of $102 selling one cash secured put at the 167.50 strike price. And that is a weekly return of 0.6%. So again, if you were to do this 4 times in a month, that would be about a 2.5% return, which is pretty decent for a stock like Nvidia. My next pick is SoFi Technologies. And again, this is one of my favorite stocks to trade. In fact, I just did a video on SoFi recently where I predicted that SoFi would get to $30 soon. And in fact, it got to $30 sooner than I anticipated, made a new high of $30.30. And then obviously it since has pulled back along with the rest of the market in the last couple of days. And I see the current pullback as an opportunity to start looking at ways to build positions in your favorite stocks. Having said that, SoFi is currently in between the top and the middle of the Bollinger Band. So I really like the middle of the Bollinger Band right here, which is around 2650 or 2660 right now. If you look at the RSI for SoFi, it's around 62, which if the RSI is over 50, then that is considered bullish. So keeping that in mind, let's pull up the options chain and see what kind of premium we could collect if we target this middle Bollinger Band, which is 2660. So I'm going to open the options chain. Again, I'm going to go out 1 week to the October 3rd options chain, and we have a 2650 strike price. And this is a delta of 21. So slightly aggressive. When I sell weekly options, I generally like to stay between a 15 to a 20 delta. But again, this is a quality stock and a quality company, and I don't mind being slightly aggressive on this one. So I'm comfortable with the 21 delta. So if you go with the 2650 strike price, you would collect a premium of about $36 by selling one cash secured put. And then that is a fantastic return on your investment. It's about a 1.38% return. So if you did this 4 times in a month, that would be a return of over 4.5% in a month. And in case you do get assigned, then you're picking up SoFi at a fantastic price. My final pick for this video is actually Oracle. And if you look at what happened earlier this month, Oracle reported its Q1 earnings on September 9th with adjusted earnings of 1.47 per share and revenue of 14 billion, slightly missing analyst expectations. However, Oracle jumped on the news that its cloud infrastructure business is projected to grow from 18 billion in fiscal year 2026 to almost 144 billion by fiscal year 2030. The strong guidance and backlog offered renewed confidence in the AI boom and Oracle's ability to capitalize on it, outweighing the earnings miss. And with that outlook, analysts expressed shock and excitement, calling the results monumental, focusing on the long-term growth potential from the AI cloud services. Obviously, right after that announcement, Oracle jumped from $242 all the way to $345, almost a over $100 jump in just one day. If you look at where it's trading right now, it's in between the top and the middle of the Bollinger Band. So if you look at the chart right now, we have a nice gap fill opportunity from where it's trading right now all the way to the top of these candles, which is around the $260 level. So if I were to build a position into Oracle, I like either the middle of the Bollinger Band, which is this $275 level, or if you want to be super cautious, you can come down to the top of these candles where we have a lot of support, which is this 260 level. Keeping those two price points in mind, I'm going to pull up the options chain. And in this case, I'm going to go out 30 days and see what kind of premiums we can collect selling cash secured puts on Oracle. So I said the first level of support that I liked was the middle of the Bollinger Band, which is this $275 level. And if you look at the delta, it's a 22 delta. This is a return of about 2.4% on your investment, which is pretty good. Now, if you go with this play, you would collect about $655 in premium. And since you're going with the $275 strike price, you would need a collateral of $27,500 to sell one cash secured put on Oracle. Now, the other thing you could do with this play is actually go safer to the $260 strike price, which was the top of the candles that we looked at earlier, and there was a strong support level. This is a delta of 13, and to make this cheaper, we could actually open up a put credit spread instead of just selling a cash secured put. And basically, you would sell the 260 strike price, and then you would buy the 250 strike price. Now, that means that we have a $10 spread, meaning that for this play, you would only have to put up a collateral of $1,000, which is just taking the $10 spread and multiply that by 100, you get 1,000. So basically, you would have to put up a collateral of only $1,000 for this play, and then in return, you would collect a premium of about $1.30. So that's about a 13% return on your investment in just a month. And it would take you only $1,000 to sell one put credit spread on Oracle versus selling one cash secured put, it would cost you $26,000. So that's it for today's video. If you enjoyed it or learned anything useful, don't forget to hit the like button, subscribe to my channel, and comment down below with your thoughts or any questions. If you would like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.